past 2 years have been remarkable for investors, with the S&P 500 delivering strong returns of over 20% in back-to-back years. I've got 3 charts that I want to share with you on this to take a closer look at the stock market's rally in 2024, a year in which the S&P 500 set more than 55 new all-time highs. The first chart, which graphs the S&P 500's return for each calendar year since 1980, shows the index posted gains of over 20% in 2023 and in 2024. This marked the first time that we had back-to-back gains of over 20% since the 4-year stretch from 1995 to 1998. And like the late 1990s, large cap technology stocks played a major role in the S&P 500's gains. The second chart here shows the 2024 price returns of 7 different ETFs, each reflecting exposure to companies of different market cap sizes. This chart reveals a significant gap between the returns of the large cap versus small cap stocks in 2024. The top bar tracks the Magnificent Seven, a group of stocks that includes Microsoft, Apple, Alphabet, Meta, Amazon, Nvidia, and Tesla. These 7 companies, which now account for more than 33% of the S&P 500, returned over 60%. When we look at the second bar there, if we were to expand that group from the Mag 7 and include the 50 largest S&P 500 stocks, the return falls to 32%. Still very impressive, but about half the return of the Magnificent Seven. Let's move down a notch. Let's broaden the group further to include all S&P 500 companies. This will reduce our return to approximately 23%. That's the broad S&P 500, right? And if we look down to the fourth bar, if we were to weigh each company equally rather than by market capitalization, this would lower the return to just 11%. So the key takeaway here is that the largest companies contributed a significant portion of the S&P 500's returns in 2020. Smaller companies delivered solid returns around 10 to 12%, but they underperformed on a relative basis. Now, more precisely, let's take a look at those 3 bottom bars now. An index of mid-cap stocks returned 12%, while small cap and micro cap stocks returned 10% and 12% respectively. The concentrated stock market rally, which was driven by the outperformance of the largest companies, led to an unusual outcome. This third chart shows the percentage of S&P 500 companies that outperform the index during each calendar year. For the second consecutive year, fewer than 30% of the S&P 500 companies beat the index. This is significantly below the average of 49% since the year 2000. And once again, just highlights the dominance of the largest companies in 2024. As a standard disclaimer, this video is for educational purposes only and is not intended to be financial or investment advice.